But first, it was another ugly end to the week on global markets. So with the latest, it's over to Jayne Edwards. Jayne.
Yes, Alan, Wall Street reacted to another instalment of worrying news out of Europe by selling down stocks sharply. The Dow Jones and the S&P 500 closed down by 3% and the Nasdaq fell by 2%, with the volatility likely to continue into next week. European markets plunged after the unexpected resignation of the top German official at the European Central Bank, which was interpreted as evidence of serious splits within the ECB. While fresh rumours also swirled about a default by Greece. Adding to the anxiety, there are serious doubts over President Barack Obama's ability to get his $400 billion jobs plan through Congress, and questions over whether it will work, even if he does. Analysts say share markets are likely to remain unstable as investors react to daily developments. Looking at share market movements over the week, it's clear where the centre of the storm is at the moment. All were in the red, but Europe slumped by 7% amid much more moderate falls in other major markets. Now, turning to news on Australian shares, here's Tom Elliott.
Well, as you just heard, the Australian share market endured yet another volatile week of trade, closing down 1%. This could have been due to some rather contradictory economic data that was released over the past few days. The June quarter GDP numbers were actually better than expected, but in contrast, the August unemployment figures were actually worse than expected. Who knows what's going on with the Australian economy at the moment? Macquarie Bank downgraded its profit outlook yet again and the stock was hammered, down 9%. Macquarie really can't take a trick at the moment. Gerry Harvey was reported in the press as ruining the day he decided to enter the Irish market back in 2003. Despite this, Harvey Norman shares were up 6% over the week, possibly on the view that Gerry Harvey might now remove his company from that part of the world. Both the gold and the oil prices were very volatile during the week, depending on people's economic outlook at any given point in time. In contrast, however, whereas the share price of Newcrest, the nation's biggest gold miner, was actually up, the biggest oil producers, stocks like Woodside, Santos and Oil Search, all saw their share prices decline over the same period. Who knows, maybe the strong Australian dollar has something to do with it. Further revelations on the News Corp phone hacking scandal, which might put an end to the career of one James Murdoch, weren't very good for that company's share price. News Corp shares down 2%. Qantas shares also weaker, down 3%. There was some disquiet amongst the union movement when it was revealed that CEO Alan Joyce's pay packet this year might total $5 million at a time when he is getting rid of Australian workers. And turning to regulatory issues, the Takeovers panel decided to reject SAB Miller's recent application. It was protesting against the recent Foster's result. However, SAB Miller remains interested. Foster's shares up 1% during the week. Winner of the week is Norton Goldfields, up 21% after Zijin Mining, China's largest gold producer, upped its stake in the company to 17%. Loser of the week is Zimplats Holdings, down 9% after a threat by the Zimbabwean government to nationalise the company's platinum mine.